Missing a single tax deadline could cost you hundreds or even thousands in penalties. And the scary part is many business owners are unaware of the multiple deadlines they're supposed to meet. If you think taxes are just about filing once a year on April 15th, you're not alone. So many people believe that. But that's not even close to the full picture. April 15th is just one deadline. And if you stop there, you'll miss estimated payments, 1099s, W-2s, state filings, multiple corporate dates. But what you won't miss, if you file late, is the penalties. The first step in avoiding those penalties and the stress is to have a clear understanding of all the key dates. And that is exactly what I will help you with today. And by the way, I'm Alex. I have years of corporate business and consulting experience. One of the companies I founded and currently manages a full-service accounting firm. And by now, I know these tax deadlines by heart. When it comes to taxes, the hardest part isn't always paying them. It's keeping track of all the different deadlines. Between personal returns, business filings, estimated taxes, state tax, payroll, retirement contributions, municipal filings, it's no wonder many business owners feel overwhelmed. In this video, I'll walk you through the major deadlines you'll hit in 2026, mostly for filing your 2025 taxes. We'll start with personal taxes, move into sole proprietorships and LLCs, and then look at corporations. Along the way, I'll highlight how deadlines vary depending on your specific situation. And finally, we'll bring it all together with a real-life example of a family where one spouse runs a C-Corp, the other operates a sole proprietorship, and they both manage a flow-through S-Corp. So whether you're self-employed, incorporated, or just filing at 1040, you'll know exactly where you fit and when to file. Let's start with the basics. Personal taxes. When it comes to personal taxes, there are a few key deadlines you'll want to remember. As we will be covering a lot today, I've created a downloadable 2026 tax calendar that you can access using the link below this video. For the 2025 tax year, your Form 1040 personal income tax return is due, on April 15th, 2026. That is also the deadline to pay any balance you owe. Now, you can file for an extension using Form 4868, which gives you until October 15th, 2026 to file your paperwork, but an extension to file is not an extension to pay. You still must pay the full amount you expect to owe by April 15th, or the penalties start accumulating. If you owe more than $1,000 in taxes when you file, the IRS might penalize you for not paying enough throughout the year. And this brings us to quarterly estimated taxes. If you're self-employed or have investment or rental income where tax isn't withheld automatically, you need to pay the IRS 4 times a year to avoid penalties when you file. The due dates for these estimated payments are generally April 15th, June 15th, September 15th, and January 15th of the following year. So, for example, for the 2025 tax year, the final estimated tax payment is due on January 15th, 2026. And for the new 2026 tax year, the final payment is due on January 15th, 2027. Also, if you want to lower your tax bill with an individual retirement arrangement contribution or IRA, you generally have until the filing deadline, April 15th, to make that contribution for the 2025 tax year. Now, let's talk about sole proprietorships. If you run a business by yourself, the IRS, in most cases, considers you a sole proprietor. This includes most single-member LLCs as long as you don't elect to treat that LLC as a corporation. As a sole proprietor, you don't file a separate business tax return. Instead, you attach Schedule C to your personal Form 1040. Because that form is attached to your personal return, your deadlines essentially are the same as personal, and the filing is due on April 15th, 2026. Just like personal taxes, if you need more time, you can file an extension to October 15th, but again, you must pay estimated tax by April 15th. It's also worth noting that sole proprietorships have a massive responsibility that regular employees don't, which is a self-employment tax. This covers your Social Security and Medicare. Since you don't have an employer withholding this from your paycheck, you are responsible for sending it to the IRS via those quarterly estimated payments we just talked about. Now, there is the wild card, sales tax. There are a lot of different state and local tax jurisdictions, which we'll talk about later in this video. But if you sell taxable goods, your filing frequency, monthly, quarterly, or annually, depends entirely on the state you're registered in and how much you sell there. You simply must check with your state's Department of Revenue. Do not guess on this one. Finally, if you have employees or hire independent contractors, you have a hard deadline early in the year. You must file Form W-2 for employees and Form 1099 NSE for contractors by January 31st, 2026. Keep in mind that some other forms like 1099 MISC, for example, might have different deadlines. So it's important to keep an eye on all the filings you need to do. And also, by the way, because January 31st, 2026 is actually a Saturday, the IRS moves this deadline to the following Monday, which is February 2nd. Now, let's move to partnerships and corporations. This is where the system gets very tricky, compared to personal filings at least. We generally see two main types of structures here: pass-throughs and C-Corps. Partnerships and S-Corps are pass-through entities, or flow-throughs, which means they don't pay income tax themselves, the owners do. And because the owners need all that tax flow-through information to file their personal returns by April 15th, the business deadline for the flow-throughs is 1 month earlier. So for S-Corps and partnerships operating on a calendar year, your tax return is due March 15th. But since March 15th in 2026 is a Sunday, the deadline is pushed to Monday, March 16th. If you miss the deadline, the penalty for S-Corps and partnerships is $255 per partner or shareholder per month. And this can add up pretty fast the longer you wait. C-Corps are different. They pay their own taxes. And remember, if you are a LLC elected to be taxed as a C-Corp, you fall into this category too. You file the same Form 1120 and follow the same deadlines for that LLC as you would for a C-Corp. The only difference is how the LLC is treated for legal purposes, not taxes. So for a calendar year C-Corp, the deadline to file and pay is April 15th, 2026. But unlike personal filers, C-Corps can actually choose a fiscal year that ends in any month. If you have a fiscal year different than calendar, your return is generally due on the 15th day of the 4th month following the end of your fiscal year. So for a September 30th C-Corp, the filing deadline would be January 15th, 2026. Also, unlike pass-throughs, C-Corps that expect to owe $500 or more in taxes must make their own quarterly estimated tax payments. These are due on the 15th of the 4th, 6th, 9th, and 12th months of their tax year. Just like personal filers, corporations can request an extension, usually 6 months, but to avoid interest, they must pay their estimated tax liability by the original due date. Okay, January 15th, March 15th, April 15th, that's manageable, right? Or is it? We haven't talked about the real chaos of the US tax system yet. In some countries like Canada or the UK, tax is mostly centralized. You usually deal with the federal government and maybe an odd province here and there. In the United States, you are effectively dealing with 50 separate countries. You see, there's that thing in the States that's called Nexus. Nexus is just a fancy word for a connection, but if your business has a connection to a state, that state wants a piece of your action. And from my experience, this is where so many business owners get blindsided. A connection doesn't just mean having an office there. What if you have a remote employee working from their couch in California? Boom, Nexus. You now likely have to register your foreign corporation in California and pay the $800 minimum franchise tax and withhold California payroll taxes. Or do you maybe sell more than 100,000 into Illinois? Or maybe sell more than $500,000 into New York and have over 100 transactions there? Boom, another Nexus. You are now a tax collector for those states too. This is why I can't give you a single deadline for all the taxes. I wish I could, but New York might want their tax quarterly on the 20th. California might want it on the last day of the month. Washington State has that B&O tax on the 25th. Oh, and by the way, San Francisco, not a state, but they have their own city gross receipts tax with its own deadline. So if you're a modern business selling online with remote employees, you don't have just one tax calendar. You have 5 or 10 or maybe 20 different calendars overlaid on top of each other. And the worst part is there is no centralized tax agency. The IRS doesn't enforce all this. States and municipalities do. IRS is federal, and nobody talks to each other. Well, at least that's what it feels like. So you could be totally compliant with the IRS on April 15th, but have 5 different states sending you penalty notices because you missed a $50 filing in places you've never even visited. To really understand how overwhelming these dates can be, let's look at a real-life scenario. Here's a married couple, Jim and Mary. And maybe let's make it a bit more interesting than just an April 15th 1040 and call it a day. Let's say Jim runs a C-Corp tech startup. To align with his business cycle, he chose a fiscal year end of September 30th rather than the calendar December 31st. Mary is a consultant. She operates as a single-member LLC based in Texas. She keeps it simple. No employees, just her. And her LLC is not a C-Corp. In other words, Mary is a sole proprietor, and only Mary contributes to her IRA. And finally, together, they own a real estate holding company that manages a few rental properties. And this entity is an S-Corp. Now, here's where this state nightmare kicks in. Although they live in Texas, which has no personal state income tax, Jim's corporation has grown. So he hired a sales rep who works from home in New York. He also hired a developer who works remotely from California. This means Jim has created Nexus in 3 different states. He's now subject to the tax laws of Texas, New York, and California. So let's look at Jim's and Mary's calendars for 2026 and see how quickly April 15th becomes just one of the several tax deadlines. In January, Mary and Jim must pay the final Q4 estimated tax for their personal income from the 2025 tax year on the 15th. But also because Jim's C-Corp has a September 30th year end, his corporate tax return, Form 1120, is actually due in January on the 15th, the 4th month after the end of his fiscal year. If Jim is waiting for April, he's already late, and the penalties would be accumulating daily. Also on the 15th, Jim owes the California franchise tax, an $800 minimum fee just for letting his developer work there. Then on January 20th, Jim has to file sales tax returns in New York and Texas. Because he has an employee in New York, he has physical Nexus there. And he has a head office in Texas, so there is Nexus there. And finally, on January 31st, Jim must issue W-2s to his employees. But he doesn't just deal with the IRS. He also needs to file specific state reconciliation forms for New York and California payroll. February is usually a quieter month, but for Jim, because his developer lives in San Fran, his C-Corp is subject to the city's gross receipts tax, which would be due on February 28th. But because it's a Saturday in 2026, the deadline moves to March 2nd. In March, Jim and Mary must file their joint S-Corp, which is Form 1120S, on March 15th. Or rather March 16th, because March 15th is a Sunday. But this is a critical date. As I mentioned earlier, an S-Corp is a pass-through entity. It doesn't pay income tax itself. It passes the tax liability to Jim and Mary personally through a K-1 form. So if they miss this March 16th filing, they wouldn't have the K-1 form they need for their personal taxes. They literally cannot file their personal return accurately until this business return is done. April? Well, welcome to the most stressful month of the year in the United States. On April 15th, Jim and Mary filed their personal returns, Form 1040. Since Mary is a single-member LLC, she just reports her consulting income on Schedule C, which is attached right to her 1040. She also needs to make sure her 2025 IRA contributions are done by April 15th as well. On that same day, Jim and Mary have to pay any remaining tax balance they owe for 2025. But they also have to pay their first quarter estimated tax for the new year, the 2026 first estimated tax payment. April 15th hits most people's cash flow very hard because you're paying last year's tax balance and this year's first estimate on the exact same day. In May, since Jim and Mary are based in Texas, the state requires a franchise tax report for every limited liability entity. That means Jim files one for his C-Corp, they file one for the joint S-Corp, and Mary files one for her LLC. Even if they don't owe $1 in tax, the report is still mandatory. And then, in June, the cycle starts all over again. By June 15th, Jim and Mary will be paying their second quarter estimated personal taxes. Just a few days later, on June 20th, Jim is back to filing those sales tax returns for New York and Texas. In July, he would be filing California DE-9 payroll forms, and so it goes on until the fun begins again in January. Do you see what happened here? If Jim and Mary had operated with that April 15th mindset, they would have been in a lot of trouble. They would have missed Jim's corporate filing and California tax in January, they would have missed the San Francisco tax in February, S-Corp in March, and they would have completely ignored the sales tax nexus created by their remote employees. This is why when people ask me when are taxes due, the only honest answer is it depends. It depends on your entity, your year-end, where your employees are, and where and how much you sell. Now, does every business have this level of chaos? No, not at all. But if you're growing, this could be your reality faster than you think. When you map this on the calendar, Jim and Mary's year is very busy. Rather than everything clustering in April, you can see how tax obligations spread across the entire year, especially considering payroll, multi-state sale tax, and S-Corp. That's why planning and cash flow management are so important. Now, every business owner is ultimately responsible for their own filings, and a good accounting firm would always guide you through these deadlines, but I know for a fact not every accountant operates that way. So to help you remember all those dates, as I mentioned earlier, I created a 2026 US tax calendar. Keep in mind, it's impossible to list every single deadline given the complexities we discussed, but that calendar should be a good starting point. You can find the link below in the description. And let me know in the comments if you have your favorite tax deadline. Thanks for watching. If you enjoyed the channel, please consider subscribing, and see you in the next video.